Motilal Oswal are extremely pleased to hold this call to discuss Q3FY18 results for LT Foods. From the management today, we have Mr. Ashwani Kumar Arora, Managing Director and CEO, Mr. Vivek Chandra, CEO of Global Branded Business, Ms. Monica Chawla, VP Finance and Strategy, and Mr. Sachin Gupta, General Manager Finance. I'll hand it over to Monica for the opening remarks, post which we can open the floor for a Q&A session with the top management. Thank you. Over to you, Monica.
Thank you, Niket. Very warm welcome to all of you at this LT Foods earnings conference call for the third quarter and 9 months ended financial year 2018. I'm Monica from the Investor Relations team at LT Foods. Along with me, I have Mr. Ashwani Arora, our Managing Director, and Mr. Vivek Chandra, the CEO of Global Branded Business, and Mr. Sachin Gupta, the GM Finance, joining in for this call. Anything which is said during this call which may reflect our outlook for the future or which may be construed as a forward-looking statement must be reviewed in conjunction with the risk that the company faces. A presentation on the performance has been uploaded on the stock exchange and the company's website for the ready reference. A transcript of this call would be shortly available on the investor section of our website, that is www.ltgroup.in. With this, we are now ready to begin with the opening comments on the performance of the company and our strategy for growth from the Managing Director. Post this, we would be available for the question and answer session. Now with this, I'll pass it over to Mr. Ashwani Arora.
Thank you, Monica, and very good afternoon to all of you. It's a great pleasure to greet all of you once again on behalf of all our Board of Directors and the senior management. We begin by thanking all of you for having spared time and joining us here today to discuss our third quarter and 9-month ended earning call for the year 2018. Before we discuss the financial performance of this quarter, allow me to quickly highlight developments of basmati rice sector in India. This year has been an increase in the paddy prices to the extent of 25 to 30% due to the lower crop production and lesser carry-forward stocks. The increased input cost has pushed most of the companies to increase prices in order to maintain their margins. In addition, there has been 5% GST on the branded basmati rice. However, you will be happy to note that diversification of the company in multiple geographies and across products has helped it in expanding its margin as well as increasing its market share not only in India but globally as well. Some of the proactive measures taken by the company this year to tide over the shortage of crop have been as under. The backend team of the company has worked extensively with the farmers to increase their yield through sustainable farming methods. Today we have approximately 40,000 acres of land under sustainable crop production across Haryana and Madhya Pradesh. Crop production survey have been carried out on a regular basis, helping in advanced planning and in diversifying its procurement into additional area which helped company to assure quality procurement at a minimum cost. It has built adequate reserve of quality paddy stocks across all its major facilities in North and Central India to take care of the next season. Now let me give an overview of the strategic update with focus on this quarter. LT Food achieved a major milestone this quarter by raising 400 crores through a QIP from renowned Indian and global funds such as SBI, DSP BlackRock, Morgan City, Reliance, among others. The issue was fully subscribed. With this round of investment, you will be happy to note that the shareholding base has now expanded to include private equity investors, Indian and international FFIs, HNIs, and retail, thereby leading to a healthy mix of shareholders. Through this fundraising, both Indian and global investors showed their faith in the future growth driver of the company, such as expanding the product portfolio and geographical presence in the key growth and stable markets like India, US, Europe, UK, and Middle East by leveraging its brands, distribution, and infrastructure. Their faith in the company has given us more confidence to continue to work with the same momentum. The funds raised will be utilized to augment long-term capital for deleveraging and therefore strengthening the balance sheet further. With the induction of these long-term funds, the debt-equity ratio and current ratios have been seen an improvement from 2.51 to 1.25 and 1.08 to 1.25 respectively. The company's transition under GST regime has been quite smooth. As you may be aware, government has imposed 5% GST on branded basmati rice. This has helped the organized player like us. Our consumer pack business has been growing by 14%, especially driven by the high margin category, which is in line with our overall strategy of increasing share of premium product in our product portfolio. The HoReCa business is still undergoing some realignment with the GST regime due to the absence of input credit to this sector. Fortunately, most of our clients are direct and hence the impact is lower. But our bulk business has degrown because of the GST. The company continues to make investment in various marketing initiatives to promote its flagship brand Daawat and Royal. It has been actively participating in various events both in India and overseas. Besides advertising, the focus continues on strengthening supply chain. Company has been working on channel-wise strategy to expand and strengthen its footprint not only in urban but rural as well. It has emerged as partner of choice across various channels such as modern trade, general trade and wholesale. It is now working towards e-commerce, which holds future potential. I am pleased to inform that various initiatives have helped company to increase share of the branded business from 56% to 61% of the overall revenue. Further, our market share of branded basmati rice in India now stands as 29% as per the recent survey conducted by AC Nielsen. Besides rice portfolio, the company continued to focus on rice-based convenience and health products. The new initiative in these areas are performing well. The Daawat Quick Cooking Brown Rice has seen a growth of 50% on year-on-year basis. Rosanna Gold Plus, which has healthy blend of white basmati rice and quick cooking brown rice, is also growing at a steady pace. These products are also available on selected food and grocery e-commerce platform as well. Daawat sauté sauces have been well accepted by the consumer during its test launch, and hence we are planning to launch this product pan-India in the next 3-4 months. Kari Kari, Japanese rice cracker from our JV with Kameda, is also doing very well in its test launch phase. Now moving to international business, our international branded business grew by 16% in volume terms from 16%. Our recently inaugurated plant at Rotterdam, Europe will commence commercial operation within this quarter. We have also launched the new avatar of leading brand Daawat for the UK and European market. The company is looking forward and believe that this step will help us to grow more share in branded segment in Europe. As mentioned in the last call, the company has set up a facility in US to manufacture 2-minute organic red hot rice. LT Food America has already won the order for one of the largest global supermarket chain in the US to manufacture RTH product for their North American stores. Our business from clubs, food service, private label and retail segment have been consistently performing as per our plan. We have recently got our product Royal and Ecolife listed at Walmart in addition to already established relationship with Costco and other chains. Further, we have been continuously making investment on strengthening our brand as well as on expanding our distribution network. Middle East is also doing well and growing in line with our plans. Our organic business is doing very well with more than 80,000 farmers' families across 15 states in India. The focus is currently on ingredient business. Overall, this business has been growth of more than 30% over the last year. Company has upgraded and modernized this existing organic facility to help to cater to the international market as well as launching the brand in Indian market. Now I request my colleague, Ms. Monica, to take you through the financial update. Thank you.
Thank you, sir. I would now present the financial performance for the period 9 months ended 31st December 2017 on consolidated basis. The company registered a revenue of 2,572 crores, which is an increase of 10% on year-on-year basis. The overall gross profits have increased by 10% on year-on-year basis to rupees 730 crores, and our branded business gross margins have improved by 120 bips. EBITDA has increased by 5% to rupees 310 crores on year-on-year basis. The growth in EBITDA was less compared to the growth in the revenue due to increased operational expenses arising out of the launch of new operations in Rotterdam and the higher marketing spends. Overall EBITDA margins still remain healthy at 12.06% versus 12.5% on year-on-year basis. Further to highlight that the branded business EBITDA has improved by 83 bips. Reduction in interest and depreciation helped the company to grow its PBT by 27% to rupees 171 crores, and PAT witnessed an increase of 20% on year-on-year basis to 110 crores, resulting in improvement of EPS to rupees 4.10 versus rupees 3.43 on year-on-year basis. EPS is based on fully diluted basis, adjusted for the stock split from rupees 10 per share to rupees 1 per share. Now let me share with you the growth and the realization split between India and international. Total India branded volume was valued at 675 crores as against 602 crores last year, which is an increase of 12% on year-on-year basis. The average realization increased to rupees 50 per kg, that is an increase of 16%. At international level, there was an increase of 23% valued at 890 crores as against 725 crores last year. The average realization increased to rupees 96 per kg, that is an increase of 6%. So that's all from our side in terms of the update of the business and the financial updates for the 9 months. So now we open the floor for question and answer, please.
Thank you, ma'am. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Rahul Maheshwari from IDBI Mutual Fund. Please go ahead.
Hello, good afternoon, sir.
Good afternoon, Rahul.
I have 2 questions. First of all, in your commentary, you told that we are focusing on the supply chain more towards the rural. Can you elaborate on what measures you are taking? What are the checks you are making and any targets to make your strengthening your back end and all this thing?
So first, so the whole objective is to, to improve the margin, so and increase and grow. So first of all, whatever the back end and supply chain we are taking measure, is the idea is to improve the margin by 1% by bringing that efficiency.
By which time, like 1% by what time?
1%, in the next 1 year, so that's the plan.
Okay, and what kind of rural distribution and urban distribution, is any number specific or any targets you want to, or what kind of models you are want to get into for distribution?
So, ruler, we have a plan to have distribution, the town up to 50,000, and then distribute through, that town to the rural market also.
And for urban?
Urban, we have 700 distributors across all cities.
Okay.
Yeah.
So this 1% gain which is there, that would be purely coming from the distribution efficiency?
No. One is, the gain is through, the efficiency, and the growth will come from, the top line and the scale.
There's 1% gain on EBITDA front you are talking of? For?
Yeah, EBITDA. Yeah, that's the plan.
Okay, and the second thing in the breakup of the India branded sales and international branded sales, the average realization for Indian branded was 16%, whereas sales was 12%. So it was there was a volume degrowth kind of thing.
Where in
India branded sales, because your realization has grown by 16%.
Yes.
Whereas your sales has grown by 12%. So any commentary on volume? That what kind of volume numbers were there?
Yes, as I told my in commentary that our consumer pack business has grown by 14%, but the bulk pack business has degrown because of this GST.
So how has it been stabilized, or going forward also you find a pressure in your bulk pack business?
So bulk pack business, whatever has been, the impact was supposed to be, so has already been, done. So we are not seeing further decline in because of the GST.
Okay.
So yeah.
And okay, so but this consumer pack 14% Y&Y, it's a purely volume driven or a value driven kind of thing?
14% is a volume driven.
Okay. And can we expect this sustainability going forward, if rest all things remaining the same?
Yes. So we have seen, the CAGR growth in consumer pack above, 12%, and that we are, hoping to see in future.
Okay. And for international, the growth was very fantastic, 23% growth, and just a realization gain has been just minutely. So on volume front, any picture on the international sales? What are the driving force?
There are, two. One is, of course, US is our main market.
Yes.
And then, Europe and the other part of the world.
Okay, so it's in terms of the base business has been growing so fast rapidly, or the new drivers business in the form of the snacks and all this has been started gaining, and how much it can contribute going forward, whatever the steps you are taking in terms of rice food products. So any target that by 1 or 2 years it might contribute to what extent to the overall top line kind of thing?
So, whatever the growth you have seen till now is mainly from our, the core business.
Yes.
But in future, we are adding these value-added product, and that will be, whatever, so we are planning in the next 5 years that be part of, 10% of our total. I have just discussed that we have in brown rice we have grown cooking brown rice 15% year on year, and this new product Rosanna Gold Plus mixed with brown rice is also doing very well.
What kind of margins are these value-added products you are making on?
So whatever value-added product we are, so that's the 35 to 40% gross margin, whatever selection we are doing.
And on base business, how much is the gross margin right now?
So this is a 28 to 29%.
Okay. And any capacity expansion or something you're in plan or CapEx plan for the year?
So whatever the CapEx was needed for the next 5 years, so we have done this year. So in future, we are only seeing the maintenance CapEx.
And to what extent that can be?
That can be in the range of 50 crore.
Okay.
Per annum, yeah.
Okay. Thank you.
Thank you.
Thank you, sir. We have a next question from the line of Mangesh Badang from Param Capital. Please go ahead.
Good afternoon, sir, and thanks for taking my question. Sir, I was looking at the margins, and on QOQ as well as YOY this quarter, it is down. So I just wanted to know, is it because of the trading business that we have, which could have reported really low margins, or it is because of the raw material related issues?
If you see, the PAT margin has improved 20% against the same period.
No, I'm talking about EBITDA margins in this quarter.
Yeah, so EBITDA margin is kind of three things which has happened. One is we have in this year we have just started the European operations, so there is a loss in that and 10 crore rupees, and then we have written write-off some bad debts in the range of 14 crore. So 29 months time. So that's the 25 crore. If you normalize that, our EBITDA margin has improved to 13.38%. So that's improvement of 83 bips, which just Monica spoken about.
Okay. So this loss in Europe has been taken in this quarter because we have started the operations just now, right?
Yeah, just now.
And it is not related to the trading business where the margins can be volatile.
Yeah, no. We so this year, if you see, the trading business is very less than 100 crore, in this quarter, in the first 9 months.
Right. And sir, now that we have completed the QIP, when do we start seeing the reduction in the interest cost? Will it be from the next quarter, or probably it will be in a phased manner?
Yes, in this quarter, whatever, you will see the impact of the reduction in the cost.
In March itself?
In March, the first quarter, yes.
Oh, okay, sir. Sir, I'll just come back and give if I have more. Thanks a lot.
Sure.
Thank you, sir. Participants who wish to ask a question may press *1 on your touchtone phone. We have a next question from the line of Ojasvi Agarwal from India Capital. Please go ahead.
Hello.
Hello.
Yes, Ojasvi.
Ma'am, I'm sorry, we can't hear you. Kindly use the handset.
I am already using that. Am I audible now?
No, your voice is breaking.
Okay. I come back to you and ask the question.
Right. Please come back, ma'am. You may please come back.
Okay.
Thank you. We have a next question from the line of Shubhankar Oja from SKS Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. So, wanted to understand the pricing scenario. I mean, as in, there has been hike in the paddy cost, 25-30% increase there. So, what is the pricing scenario as of now? And if you can also talk about the demand part of it.
The procurement is almost done, so prices are strengthening further. So we are very hopeful that these prices are going to sustain till the next crop. And demand side is as whatever the natural growth category growing, so that has been there in either in export or India.
Okay. And now that the procurement is completely done, so what is the inventory figure finished as well as the paddy inventory?
Give me a minute. The total inventory value is around 1,800 crore.
Okay.
So paddy is 220,000 ton. And rice is 115,000 ton.
What was our average procurement cost for paddy?
So this is 30911.
30?
31.
31 rupees per kg?
GG.
Okay. And if you can give the latest, what was the usage? So entire QIP money has been used to retire debt?
So partly, it has been...
so what is the number at the end of, say, January? I mean, obviously, after retiring the... after using the QIP money, what is the number?
So you mean to say the debt?
The debt number, I mean to say, yeah.
So debt by 31st March, we have a plan to reduce from 150 to 200 crore rupees. And rest, because the prices has been increased, the rest has been used as working capital.
I see.
Yeah.
Thank you, sir. Thanks.
Thank you. Thank you.
Thank you, sir. Participants who wish to ask a question may press star 1 now. We have next question from the line of Pradesh Maru from Money Curves. Please go ahead.
Hello.
Yes.
Good afternoon. Thanks for taking my call. I have 2-3 questions, sir.
Yes, sir.
One is that if you can give me the exact quantity breakup of branded and non-branded sales volume for quarter 3 and 9 months.
Okay. So I will give you that, in 9 months, no?
Yeah.
Total is the...
For the quarter and 9 months.
Okay. I will give you that 9 months.
Okay.
Is 225,000 ton for the 9 months, the branded.
Branded. Okay.
Yes.
Non-branded, sir?
Non-branded is around 78,000 ton.
Okay.
Yes.
And for the quarter, can I get?
For the quarter at the, so our 70? Around 78,000 ton.
Okay. Branded, huh?
Yeah, branded.
Okay. Thank you so much.
Thank you, sir. We have a next question from the line of Kashyap Javeri from MK Global. Please go ahead, sir.
Yes, sir. Thank you for the opportunity. I missed out the inventory figure. You said 1,800 crores is total inventory, of which paddy is how much?
220,000 ton and rice is 115,000 ton.
And you said the cost of that paddy is roughly about rupees
31 rupees is the paddy and 51 is rice.
Okay. And what's been the realization in, let's say, average for the January? So you mentioned about 50 rupees per kg is for M9, right? For
no, 50 rupees per kg is in India.
That is for 9 months?
Yeah, for 9 months. And
Q3.
export is 96.
Yeah, those numbers I got, which is plus 16 and plus 6%.
Yeah.
This number for Q3 was how much?
Like the average realization?
Yeah, average for Q3.
Yeah. 53 rupees around India.
Okay.
And export is 100 rupees.
And in recent months, there have been some reports that international, basmati prices have been coming down. Is that right? I mean, if you look at, data which is, some data which is coming in newspapers.
No, rather, it's the other way around.
Okay.
The prices are strengthening.
For export and for domestic?
Both, because the input cost is, it's all driven with the, the paddy prices.
Okay.
So paddy prices is up by 20 to 3% in procurement season, and now it's further strengthening.
Okay. So in January, this 53 rupees per kg would have gone up by how much number?
That will be in the just 56 rupees will be the realization.
And about same 3-4 rupees in international exports market also?
No, export market it takes time to to react. So export market will be from the next quarter.
Okay.
Yeah. So in branded, you have to in overseas you have to lead time 3 to 4 months.
Okay.
Yeah.
Sure. Thank you very much, sir.
Thank you.
Thank you. We have next question from the line of Ojasvi Agarwal from India Capital. Please go ahead.
Good afternoon again, sir. Sir, my question was again related to the financials only. There's been a surge in the other income, which is at some high level. So could you tell me what the nature of this other income would be?
Sorry, Ojasvi, what was your question?
The other income figure for quarter 3 of December. So could you tell me, it's about 17.5 crores. So could you tell me what this other income would be?
So this is mainly from, the exchange difference,
The exchange difference. Okay, and so the margins, the gross margins specifically, have dropped quite a bit in this particular quarter, that's December 17. So, sir, are they likely to go up now in the next quarter onwards?
So the gross margin have not been dipped, so as compared to same comparison, it was 28.3 and now it's at 28.4.
Okay.
Yeah. So if you normalize, then, the gross margin has improved by 1%.
Okay, so this is after taking off the one-off cost that you had mentioned, the European operations and the bad debts.
Sorry?
Sir, this is because of the one-off that you have taken, because of the European operations and the bad debt?
No, that is, below GP.
Yeah.
Yeah.
Okay. Okay, that'll be all, sir.
Yeah.
Thank you. We have a next question from the line of Kiran Singh from Kavi Stockbroking Limited. Please go ahead.
Good afternoon, sir. Thanks for giving me the opportunity. Sir, since you are active in Europe and American market, and there has been issue relating to pesticides, how much impact it has on your overall sales in USA and Europe?
In Europe, if you see in the last quarter, we have had enough quantity to run our, the 6-month operation. And on the other side, we are, as I mentioned, that we are working on the sustainability farming program. And we have the enough quantity to service, the Europe market as per Europe compliant product.
How much serious is this issue, sir?
Sorry?
How much serious is this issue, pesticide issues?
So it's a issue is, it's a registration issue. So I'm sure, the company has registered its food safety data, and in the next 9 months, we will get a registration in the European,
So how is emerging demand scenario in international markets for basmati rice?
So
any order from China side, sir?
China is not a big market for basmati. So main market for basmati is Middle East, Europe, America, and India. So rest are very small markets. But the main market, Middle East, Iran has opened. So Saudi is growing. Middle East is growing at a lesser pace. Europe and America is growing at a bigger numbers.
Do you expect any import order from Iran in recent future?
As far as LT Food is concerned, we are not in the Iran business.
Okay, sir.
But, as an industry, yes, India is getting the orders.
Which geographical segment you are counting more that you will have, faster growth in international business?
Yeah. So as far as LT Food is concerned, we are operating in more sustainable, politically sustainable geography. We are very strong in India, America, Europe, and in the lower Gulf. So we are not, working, which is little bit politically unstable market, which is like Iran.
Yes. And secondly, sir, you talked about that loss in European business operations of 10 crore that led to deterioration in EBITDA margin. What other factors have been there in contributing deterioration in EBITDA margin, sir?
So one was, it's in the return of as a bad debt, and the other was, the European, the pre-operative expenses we have just, done in Europe.
The return of bad debt to what extent, sir?
So 14 crore.
14 crore. Okay, sir. Any capex plan? You said that there will be maintenance capex only to the extent of 500 million or so.
Capex, this year we will be doing a capex of around 150 crore rupees. 150
crores, sir. And how is the domestic market demand scenario is emerging, sir?
Demand, sorry?
How is demand scenario appearing here in domestic market?
Domestic is growing, as I said, our consumer pack business is growing 14%. And as per Nielsen, 9 to 10% market is growing.
Okay. So you talked about market share. Where does your company's market share stands in India?
Sorry?
What is market share of your company domestically?
29%.
29. And globally? Export market?
Globally, like in US, we have 50% market share.
Right, sir.
Yeah. So globally,
thanks a lot.
Yeah, thank you.
Thank you, sir. We have a next question from the line of Akash Mangani from BOI XI Investment Managers. Please go ahead.
Yeah, thanks for the question. Actually, on one of the earlier questions, you asked a question on the gross margin decline. I had a similar question. I think for this quarter versus last year, the gross margins are down by 5%, 500 bips. I'm not sure how you were saying that it was up. Could you help me in the calculation? Where am I missing it? Hello? Hello?
If you see the 9-month gross margin, so we have, almost same 28.2, 28.3 was, the first 9 months. Now it's 28.4%.
No, for this particular quarter, Q3 versus Q3 last year, they're down by 5%.
This year, we have done major export to Europe, which is brown rice, which has a lower gross margin business for our Europe operation business. Yeah. So if you see the branded business, in this quarter, our gross margin has improved 29.5%.
So Europe is what proportion of sales for you?
Last quarter was a big shipment, so it was 150 crore, last quarter we have done.
Okay, so that was a one-off big shipment, or on a sustainable basis we'll be doing 150 crores?
That will be, that's because we have, as I said, we have shipped for the 6 month.
Okay.
Because of that issue, so they have done that by 31st December you can ship as much as, so they will not have an issue.
Okay, so but if I analyze on 9-month basis, this 28% gross margin that you're saying, that should be sustainable going forward?
Yes.
And, could you talk about, over the next 2 to 3 years in terms of strategy, what is your growth strategy in can you say, be specific about markets? And I would also like to understand what is your strategy to increase the EBITDA margins from here to, whatever the target is, and what is that target?
So the plan is to, grow, depend on market to market, but average growth what we have planned is 12% on an aggregated. And we have a different strategy, like India we have I will, pass on to Vivek ji on defining that.
Okay.
Yes, good afternoon.
Good afternoon.
See, India is a market which is growing at about 10 to 12%. We are the leading brand, and we believe we will get more than fair share of this growth, which is further, bolstered by the fact that we will continue to invest on the brand. As we spoke earlier, there is a continuous drive to expand availability through more distributors and through more coverage of stores by our distributor and our sales organization. And the second big plank of our growth in India rests on the development of the HoReCa business, for which we have a dedicated sales organization, which is expanding the HoReCa base. So India will be one big driver of growth. The second big driver of growth that we will have is the United States. In the U.S., the market itself is growing with the conversion to Basmati across all ethnicities. And with a 50 share, we are positioned across all trade channels to be able to cater to this increasing demand. So as a result of that, when the Hispanic population or the ethnic population there is looking for basmati, then Royal is the brand which they are most likely to find in the markets that they purchase. The other driver of the U.S. growth would be the startup of the ready-to-heat, the 2-minute organic rice, which the plant is now going on stream, and there's already an order from one of the big retailers that has been procured. Europe would be the third driver, with the facility which has come up in Europe, taking away the cost disadvantage that we had because of the duty which was there on fully milled rice. So our facility there therefore gives us this entry into the European market, and there's a large chunk of that growth that we believe we will be picking up from Europe. And the last real big driver of our growth is our organic business. Mr. Ashwini Arora spoke about how we've expanded the back end and the supply points of the organic produce from India. And there is a going forward CAGR of 23% that we have. So these are the drivers of the revenue line. EBITDA would increase. We're looking at about a 2% point increase in EBITDA over the next 4 years, driven by one scale. So as we get more revenue, the operating leverage is going to flow down, and that actually is going to be the biggest driver. In our calculations so far, we've not put the efficiency drivers in our computation, but they're likely to add another percentage points once we prove them. So that's the revenue and the EBITDA drivers that we see over the next 3 to 4 years.
So thanks for that. Is there no driver coming from the change in sales mix? For example, the branded business is 61%,
right?
And I believe it's a higher margin business for you. You can talk about what the margin is over there. But over the next 3 to 4 years...
Absolutely right. I mean, the mix, which is more branded and more organic itself, is going to take our GP from, which is reported at about 28.5%. In 3 years' time, that would change to about 30.5%. So there's a 2% increase in GP, which the mix of moving to branded and moving to organic will give. So thank you for pointing that out.
So what you're saying is 2% from gross margin and 2% from operating leverage. So that's a 4% increase over the next 4 years?
I think at the composite, we're talking of 3% improvement on EBITDA.
Okay.
So while these are gross numbers, but I think once you sort of, open up the decimal points, you probably look at about 3 point some percentage increase on EBITDA from these two.
And for this to happen, your branded share needs to go to what share of the overall?
65%. So of the total growth that we've got going forward, about 2/3 of that growth is going to come from the branded business. And once you bring into it organic, branded plus organic accounts for almost 75-77% of all the growth that is there.
Mm-hmm. Okay, that's fair enough. What is the growth rate specifically in organic business over the next 2 to 3 years you're looking at, and what is the EBITDA margin you plan to do in this segment?
Organic would have a next 5-year CAGR of 23%.
Okay.
And the EBITDA margin on that is 16%. 16%, yeah.
Okay. And so with all these numbers, I mean, where does ROC sort of shape up for you by the next 3 or 4 years? I mean,
yeah, at the end of, I think, 4 years, the ROIC would be 22%. It will go from the current 15% to 22%.
Okay. Fine. Thanks a lot.
Sure.
Thank you, sir. We have a next question from the line of Runchan Jain from Nirmal Bang Securities. Please go ahead. Please go ahead and ask your question. Runchen Jain, your line is unmuted from Nirmal Bang Securities.
Thank you. Just one clarification, sir. What is the current basmati price going on vis-a-vis the last year?
You mean to say paddy price?
I mean to say the rice, not the paddy, the raw MRP, the selling price.
Rice has a different varieties, so it ranges from,
So what is the paddy price, if that is a correct parameter to look?
So paddy prices is again, the variety wise, but I can tell you the average price, this year, 31, last year was 25.
And the last quarter, sir? I mean, it is not quarterly, right?
So the procurement start in the month of October.
October, okay. Fine, sir. Thank you.
Yeah.
Thank you. We have a next question from the line of Alpesh Thakkar from Motilal Oswal Securities Limited. Please go ahead.
Yeah, congratulations for a good set of numbers, sir. Just one question. We had acquired Gold Seal, Indus Valley, and Rosanna brand from HUL to strengthen our presence in Middle East. And as far as I know that we have been talking, and that Middle East is not our focus right now, so because especially Israel. So can you please throw some light on the Middle East part that you had acquired this brand? So what is the strategy going forward for the growth out there?
So let me correct first of all, Middle East is a big, so under Middle East, Iran, Iraq, Saudi, and Lower Gulf. But we have a focus in the Lower Gulf and Iraq. Okay. And in the Lower Gulf, Indus Valley and Rosanna was very strong brand in Oman and Qatar. And the idea was to strengthen that market. And so Lower Gulf, we are growing 12 to 13% year on year, and Indus Valley and Rosanna acquisition is also going as per plan.
Okay, that's it. And so one more, we had also acquired 817 Elephant brand from DSSS for growing our strength in regions like Canada, Australia. So how is that acquisition, like, is it on path, and are we still focused on that? So what is
so 817 is a very strong brand in Canada, in some part of the eastern part of the, east coast of the America, and that's again, going as per plan.
Okay. Thanks a lot.
Yeah, thank you.
Thank you, sir. We have next question from the line of Pradesh Maru from Money Curves. Please go ahead.
Well, most of my questions has been answered. I had just one question. Last year you had done the total quantity sales of 5.75 lakh ton approximately. Any idea if you can give about current year's sales?
So last year, whatever the quantity was, including the non-basmati, 570. But this year, we are, as I said, we are not doing much of non-basmati business, and basmati business for us is growing.
Okay. So can you give me how much was last year basmati and non-basmati, because that was never discussed in earlier con calls, so that at least we'll have the idea that what is the growth last year versus current year.
So give me, this is the basmati. No?
If it is not available, then I can send you an email and you can send and give it to me, sir.
That will help me. If you can send, we send you the detail of
that's
that.
Okay. Thank you so much.
Our basmati is, overall basmati is growing at a 7%.
I beg your pardon, sir?
Overall, basmati business is growing at the private label, branded, and all together 7%. But I will send you, if you can send me the email, I can
Yes, I will do that.
We can reply you.
Yeah, thank you so much.
Yeah.
Thank you, sir. We have a next question from the line of Shubhankar Oja from SKS Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity again, sir. So do we have any update on the insurance claim? I think we have something to report before March as per our last discussion.
Yes. So, what we are expecting, by the year end of 18, we will have verdict from, district court.
Before March, you mean, sir?
End of this 18, December 18.
Okay.
Yeah.
All right, sir. Thanks.
Thank you. We have the last question from the line of Mangesh Badang from Param Capital. Please go ahead.
Thanks a lot, sir. Sir, a couple of questions related to the earlier ones only. So firstly on Rozana, so you mentioned the acquisition is going on plan. So just for our understanding, what would be your expectations in terms of revenue potential of that brand as well as growth? And sir, secondly, any clue how much, probably, according to you, what could be the provisions that could come up in fourth quarter and the probable loss in Europe in the coming quarters, so that we can just understand, what the normalized EBITDA margins could be going forward?
So, Europe, I think from this quarter, whatever the loss has been, has to be accrued, it has been accrued.
Okay.
So next year, we are seeing a break-even Europe.
Okay.
And as far as your Unilever, acquisition, Indus Valley and, the Rozana, as I said, we are going as per plan,
So what could be the potential there from Rozana and the growth perspective that I'm asking?
When we acquired the company, the revenue was around, the branded revenue was 50 crores.
Right.
And hopefully, we will be, this year we will be doing the same. So we are further strengthening, these brands to take it forward,
Okay.
Yeah.
Okay, sir. Thanks. That's it from my side, and best of luck for your next opening.
Thank you.
Thank you, sir. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you, everyone, for listening patiently to us and taking out time from your busy schedule to participate in our earnings call. The management shall continue to work towards providing consistent, responsible, and profitable growth. The mid to long-term outlook on this sector looks quite strong, led by increasing urbanization and increasing in millennium, like most of you. Thank you.
Thank you very much, sir. Ladies and gentlemen,